Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. A lot of volatility in equities overnight coming into today. They were all higher, but we've seen some of that come in. Before we dive into that price action, I want to talk about gold. If you read our Morning Express today, you saw that we were very upbeat across all time frames. Now, we've been bullish bias on the Morning Express for this most recent wave, but we've been unequivocally bullish gold for a very long time. However, today we had an intraday signal. So again, if you read the Morning Express, we are very upbeat across all time frames. Now, I'll show you this chart, and you can see here, it's got slammed down after the open, after the intraday open. Gold fell out of bed, and it's come back. We had a buy signal in here. The market, again, slammed down. We ultimately have to manage our risk. We manage accounts for clients, manage accounts working with clients. And the most important thing is to manage your risk, and especially volatile times like this. So we had an intraday low coming off in a more of a daily trend line that held. We were very confident thinking the low for the session was in. We put stops near there to manage our risk. And guess what? We got hit. There's no worse feeling as a trader to see the market get hit, take you out, your stop get hit and take you out, and then the market come back. And so I just wanted to spend a moment. We're not perfect here. Everybody's human. But again, what it comes down to is managing your risk. And that is what makes you be here for the next day and makes you bounce back. For me, I had to walk away for a minute here, went for a quick run, refresh, and come back to the screen and finish the day out strong. So now let's take a look at the equities here, because you're seeing the Nasdaq actually down about 1% on the session. The S&P has turned green here. This is coming ahead of Google's earnings today. So you take a look at all big tech, every single one lower: Google, Facebook, Microsoft, Amazon, even Apple down a little bit. Healthcare is down a bit. So that's also dragging on the S&P. The Russell is up about 2%. Small caps have been on a tear. But again, Google after the bell, as well as Starbucks, AMD. But let's focus on Google's chart here. I think this is interesting because you have a nice channel. There's a lot of analysts out there that have a 1250 price target. So we're out above there, and basically where we are right now, we're coming right into that 1250, heading the last hour of the session, but ahead of earnings too. So it's going to be interesting. Does that trend line get broken, or do we start the next wave up? So look for Google today, Alphabet, to set a tone heading into, we got a lot of earnings this week. Facebook, Microsoft, Tesla tomorrow, Apple, Amazon on Thursday. Not to mention, tomorrow you do have as well the quarter one GDP, the first look at quarter one GDP. You do have as well as the Fed meeting. So the Fed meeting at 1 p.m. Central Time. It's going to move markets. It's going to be a lot of volatility. And then in the evening, we're not done. Chinese manufacturing data. So take a look at the Nasdaq. It is lagging today's action, but it outpaced the other indices early on. You can see here 9,000 has been our major 3-star resistance level, but it really hasn't been able to close above what's developing here. About 8,900 stuck our nose out above there today. A little interesting sort of spinning top pattern, but again, it's going to be driven by earnings. Do we push lower here to start the new session after Google's earnings, or do we recover, and does it set a tone back towards 9,000 ahead of Facebook and Microsoft and Apple and Amazon? So keep that in mind. Manage your risk, just as I talked about in the gold trade. Manage your risk intraday. Be here tomorrow. That's what's important. And lastly, let's finish with the Treasuries as we look at the Fed. I talked about the 10-year yesterday. It pinged that trend line. We like Treasuries. We like exposure in Treasuries. We think there's going to be another move, sort of a gasp for air, but manage your risk. So where the 10-year has a nice move here, you can look at 10-year options. One thing we do like are 30-year bond options too. There's something that we've kept coming back to on these moves. This is the 30-year bond here. You could get a nice call spread somewhere, in 82, 86, so a 4-point wide spread. You can maybe get it for about a whole point, $1,000. Get a $4,000 wide spread for $1,000. They give you exposure. If we get out above here in the bonds, out above about 83, we should run a bit, and that's a good area to capitalize. That's a June expiration, which expires the end of May for the bond. It's something to think about. Give us a call. We're here to talk about anything on the board. And remember, manage that risk as you head into a lot of volatility over the next 24, 36 hours, and even longer. ECB Thursday. So give us a call. Remember, though, futures trading involves substantial amount of risk of loss. It is not suitable for all traders. Thanks.